Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah, welcome to the Foundation for the Study of Cycle. We have another episode of Cycles TV. My name is Lars Fontin and I'm your host. Every week we meet here to analyze some financial assets and apply our cycle analysis. Today, as you might have seen in the announcement, is a special episode. I will pay attention, and I think there might be a long-term cycle opportunity out there, which I will spend more time to explain, because we're talking about a commodity here, or commodities in specific, a little bit different if you want to profit from the trade experience. Today, again, we need to talk about natural gas, US natural gas. That's first important. There are different regions. We're talking about the US natural gas price and why I call this a kind of super cycle situation. We are in here for maybe the next 1 or 2 years to come. I will explain on a very specific situation today. If you had read the news end of last week, you know that even natural gas and LNG is part of now geopolitical and political discussions also in the US. So this comes hand in hand with the cycles to talk about. I will really share a lot of charts with you today, and I will put links in these charts and this analysis in the video section. I just completed them up front here. So after that session, you will find all charts in the descriptions below. At least 4 charts with reference for you to review these charts are available. And please be with me. I need some time to explain these charts. The difference in today's session versus if you have seen last week's session on commodities, that is that I will highlight a special relationship on natural gas, and I will analyze cycles not in the specific raw price series of natural gas, so not measured in US dollars or another currency. Today, we will take special attention to very specific commodity cycles, and this commodity cycle is then the gold to natural gas ratio cycle, which means that we measure gold priced in natural gas. And this is a well-known commodity cycle out there, which has been used by a lot of commodity researchers out there. And there's a long historical evidence around that cycle. So let's take out the US dollar out of the equation. Let's measure the cyclic performance of natural gas versus gold. And let's see if we can identify important patterns in that behavior, cyclic behavior, and then at the end, can we relate these behaviors back to the price cycle, as in the end we are trading the price and not a ratio. But I will end that session with exactly this meaning, and then you can see this in an additional analysis compared to last week. But enough talking. I will directly jump into the charts for today. So we are live. I will monitor the chat section. Hi Dale, hi Andrea, hi Adrian, hi Mehandra. I see you're already there. Thanks for joining me. If you have any questions, please put your questions in the chat section. So latest at the end, I will pull up your questions and discuss them here. So directly jumping into the topic. What is the gold to natural gas ratio? It's a very prominent ratio. And I'm not the first now talking about that kind of ratio. Here you see a chart which shows the gold to natural gas price ratio in red and compared or underlying is in blue. You see the forward 16 months performance of the natural gas price. Yeah, maybe if you review that video, you can press pause here for a second, because that's a very important picture. Because you see, if we have peaks in the red curve, which is the gold to natural gas ratio, we can see that this is also the peak in the forward-looking 16 months performance of the natural gas price. So by saying that, this means once we have a high gold versus natural gas ratio, could be read as this is a low in the gas prices, and then often is followed by a 16 months increase in the natural gas prices. And this series goes back to 1960. So this is a long-term historical analysis of the gold natural gas ratio and the forward-looking 16 months performance. So there's statistical evidence that once this happens in the gold to natural gas ratio, there's a over 75% expectance that we can see rising gas prices. I mean, this is statistical data. It's out there. You can also find a lot of research on that. So the first topic for today, if you are not aware of the gold to natural gas ratio, and by the way, you can apply this to almost any commodity, the gold to oil ratio and other ratios, that's a very interesting approach to analyze special situations in commodities. I mean, we are interested in cycles here today, so that's just the starting point. So now let's switch to some charts here. First, before we can analyze our cycles, we need to prepare or convert that data set for our analysis. Therefore, I will just now switch to a chart and explain you a little bit how you can also build this kind of analysis. So you can use any charting application, and I use just the public version here of TradingView, and I will share the charts afterwards. This is just a public charting application on the web, and you can see here in the upper left corner what I'm charting here is the gold price versus the natural gas price. So you can create this kind of idea on your own. This is what I just did here. It's the weekly data. So the black data is now our own created price series, which compares the gold to natural gas ratio. So what I've also put below that is the natural gas price on its own. And you can see the relationship. So once this ratio reaches high turning points, so this is then correlating with lows in the natural gas raw price series. So every time we make a big top in this ratio here, at that point in time, we see important lows in the underlying price. And here's another top. And here's the low of the natural gas price series. You could also read it the other way around. So when this ratio makes important lows, we have a key top in the natural gas prices. So that's then similar here. At this low, we had an important top. And then the key low here of this ratio, we had this core top here in that indicator. So that's just the quick and dirty understanding why this gold to natural gas ratio is very important to spot key tops or bottoms also in the underlying natural gas series raw price versus the US dollar. So now we have a ratio which we can now start to analyze to detect important points in that series when we expect important major tops or bottoms in the natural gas price series. So by doing that, we now load that data here on top. So on top you see this ratio. We will convert this data or just download it and upload this data into our cycle analyzer. And I want now to guide you through the process if we can detect, not only have the raw measurements of tops and bottoms, because that's always after the fact in that series, but can we identify some cycles in the gold to natural gas ratio. So therefore I have now downloaded that data. You could do this with any charting platform, just create that data set and upload this into the cycle scanner. So let's do this now together. So here I have done the conversion for you. So what you see here is the gold to natural gas data. I have manually uploaded this, and I will show you in a second how you can repeat that analysis with our cycle analyzer. So we have now this data from the price series in our cycle analyzer application, and let's start now with the basic analysis to check if we find important cycles in that application. And by doing so, you see at the bottom, this is the spectrum analysis of that chart here, where we can now identify underlying price or rhythm in that data set. And we clearly see that our dynamic time cycle analysis based on the spectrum analysis shows a cycle with 220 weeks. Now, this is a weekly series we are analyzing here. And to be honest, there's not much to the left, to the right. This is not a peak I would allow, because, you know, the right shoulder of that peak is even too slow. So the only real peak is here, the 220 weeks cycle. You can also see that's also recommended by our artificial intelligence using that cycle. So yes, there is a cycle. Second, let's now watch that cycle. I mean, it's even manually seen, but I mean, isn't that a nice cyclic behavior, which we now also see in the gold natural gas ratio? That's a perfect rhythm. You won't see that rhythm by just manual analyzing price, which I did last week, so you can move back. But this is the ratio, and you can go even back here. Let's move back. This is 1995, so this is almost 20 years in the past. And you see perfect alignment of that static 218-week cycle, with that top, that low here. And you know what we're doing here, so I don't need to explain it. We are looking for the correlation in time when the turns in our price series and the indicator turn out. That's what we're looking for. We are not using these cycles to predict these absolute price movements. So that's why this deviation is allowed here from the theoretical price and the real price. But the timing is almost perfect for over 20 years. And you see how prominent this cycle has become lately, or for the past 10 to 12 years. So we have a nice rhythm here. And I mean, I think you can already spot what I'm trying to talk to you here. So this weekly cycle, and this is a long-term cycle, we are talking about a multi-year cycle here, 220 weeks. This is in its bottoming area now here. So this is the interesting window. I don't want to go to the exact topping point here, which is early summer, but a cycle with about 220 weeks just allows some deviation, plus minus 5% to the left or right. So we're talking about a range of 2 months, and we have entered that time window now. And I would call even again, I mean, I have highlighted you about this opportunity already April last year. So exactly at that point in time here. At that point in time here. Sorry for that. And we now switch to also the daily analysis. So yes, we have a 220 weeks rhythm in the gold to natural gas ratio. And that cycle currently shows us that the gold to natural gas ratio is at a topping cycle. And you know what this means. If we are at a topping cycle, the natural gas price, the raw price, will see an long-term low, or the other way around. From the statistical significance, we could expect for the next 16 months that gas prices will rise from that level based on the study or the statistical analysis on that commodity cycle I shared at the beginning. We will now add our other indicators for sure. So to have that then also with technical indicators here, but I will come to that in a second. So now let's move, as always, to the next shorter cycle. Why is that here? And therefore we move now to daily data. So that was just weekly. Let's do the same now on daily. So just for a second. So here is the same data just uploaded as daily data, and I'm repeating that analysis because we have a big move here in natural gas prices. So therefore, I think it's important to just recap that different analysis, analyzing the daily series, the daily gold to natural gas rhythm here or ratio here. We identify these 256 day cycles. Sorry for that. And maybe if you remember the analysis we did here last week for natural gas, this is the same cycle which you also can observe in just analyzing the raw price of natural gas. So, and I mean, it's clearly, I think I don't need to explain how to read that spectrum plot here. There's no discussion about that cycle. And this is now the short-term cycle. And I think I talked a lot about that. That's the reason why I have highlighted that in April last year as a possible opportunity that natural gas prices will increase, because the ratio of the gold to natural gas has arrived short-term at a very high level at that point in time. Which means the ratio should fall, and subsequently during this time the natural gas prices should rise. We will switch to the technical chart in a second, which did happen, and then we saw a pullback here into, I think this was December. Then a pullback of the natural gas prices, or the rise of that ratio, and then we saw this up move again here, but now this quick pullback, this heavy pullback again. So we are now back, and then now that's the beauty. And we have been discussing this, that I would be careful or not trade in this period, because this upswing cycle in the gold to natural gas ratio needs to complete until the next swing is starting. So April last year, that was the first point where I referenced that. That period now, from let's say November to February or now, this is the critical period, because we see the gold ratio to rise, which would conclude with a declining natural gas prices. And once we arrive at that topping window here, that's when the cycles get in sync again, because that's when we expect the short-term cycle to fall again. So here now the short-term cycle, the ratio is expected to come down, which means that natural gas prices will stay to move up. And then we are in alignment with the long-term cycle, because during that period here, we have not been in alignment between the short-term and long-term cycles. So from November to February, we had conflicting cycles, long-term, short-terms. But now again, we are coming into alignment of these cycles again on the ratio. So, which means we are entering a very interesting period where the window has opened now, not only on the natural gas cycle's raw price. I analyzed these last week for you. We are here analyzing the gold to natural gas ratio cycles, which are a little bit different, not totally. So, and now let's move to the price chart. That even becomes more interesting when we match this information back to the price chart. So now I will move or switch to a prepared chart here, and let's go full in. So what do we see here? We have a weekly chart. So first we see the gold to natural gas ratio plotted on top. So the black series here is the ratio. And you now see the cycle we have detected with our cycle scanner. I have just overlaid this here. So now you see the beauty of combining cycle analysis. First, use the data series in your cycle analyzer. Be sure to get the most dominant cycle. And now we can move to our chart and technical analysis. And you see the 218-week cycle here just rolled over to the technical analysis. So we see this cycle here is in that topping stage. And now I've also added a famous indicator here, the cyclic RSI. It's a free public source indicator, also available on TradingView, which then helps to fine-tune entries and exits on that chart. And on the bottom, I mean, that's at the end what we are interested to trade. This is the raw natural gas futures contract prices. And first, I've just put in some lines here, vertical lines, when the bottoms and tops of that cycle in the upper window align. And you can see that these cyclic bottoms here, which is here, here, and here, and here, and if you move down to the vertical lines, these then correspond to really key tops in the natural gas price series. Yeah, so just highlighting here by these red arrows and this vertical lines. So you see by analyzing the cycle in the gold to natural gas ratio and then mapping the turning points here down below, we can even make this a little bit larger here, that we see the price moves. You see how perfect the timing correlates to really key changes in trend in the raw price series, almost perfect. So these cycles are even more fine-tuning than the one analyzing just the pure raw price. This is what we also learn. We should use not the main price series for cycle analysis. Maybe there are other more interesting topics here. So that's the long-term cycle, and this is the same pattern here for the key tops in that cycle. You see the vertical lines, and you can assign them with the green arrows on the price chart on to so the price arrows on the main tops here. And you know the reason why I really put so many highlights here, this opportunity might come in every 3 years. Yeah, so I can do a weekly natural gas analysis for you, but the key points only arrive maybe every 3 years or 1.5 years, yeah, long or short. So it's not about doing this every week. It's about identifying now the real important windows in time. And therefore, please excuse that I put now a little bit more attention on that specific series. So getting back to the chart. So now you really know first why I highlighted that situation here first and brought that also to your attention. You can now use even technical indicators to even dive more specific into that situation. And maybe if you see what I'm highlighting here, so the technical indicator reached the upper band and below April 2023. And maybe now you understand why in April last year I went out and made that natural gas long-term call trading at $2 and it moved up to 350 based on that. We then had this huge bounce. So I'm now showing up here again a second time because we need to take into account the shorter cycles. And if you see that it looks like we are making maybe even a higher high in the ratio, by the lower high in the indicator, you know what this means in technical analysis. So we might arrive now at the window for the next 4 to 8 weeks at a very key low in natural gas prices again, long term. And we can now fine tune that into the short term cycle. So let's now switch and do the same on the short term daily chart here. So this is the daily chart I've prepared for you. And now you see how everything fits together. And therefore, I like this study because now you see that preparing the asset under review, so natural gas, using maybe a different measurement than just the raw data. So in that case, we use the gold to commodity ratio. Preparing that data set, moving to the cycle analyzer. First, pay attention to the important cycles. Then use that cyclic information, move back to your trading chart, and there you have full glance of the data. And now let's do the same on the daily chart. So we have the same here, the gold to natural gas ratio, which is the dark blue, the dark black line here. We have the 218-week cycle, which is this cycle here, which we derived from the weekly analysis. And you might remember we did also the daily cycle analysis, which gave us the 256 days cycle. And due to the cycle analyzer, we know the phasing. So the phasing we only get from our cycle analyzer. So I have now put the correct phasing onto that chart. And now you see even better that from the short-term perspective here back in April last year, what I explained, that was the first time I gave you that pre-warning that we might see now this key low in natural gas prices here. That was due to the 250-day cycle and the longer-term cycle now coming into play. But you see now, or let's even stay for a second on the 256 days cycle here on top. So you see also the nice alignment, and with these vertical lines here again on the chart. So I've put the vertical lines on some tops of that short-term cycle. And if you move down to the price series of natural gas, so here is the raw price, you see once these tops in the ratio occurred, natural gas made a key low or rallied afterwards with a huge improvement to that point. So this was trading at $2 and this was the top at over 350 here. So here we had a huge increase in gas prices here from 5 to I think 8 to 9. Here you see at that interim top here we had this low in natural gas prices and then this huge up move here. And then at these tops here the up moves stopped and moved back. So the short-term cycle, and here again we have that top here. So that was the starting point for the gas prices even to move on. And you can go back in history, even 2016 here, where we have that short-term top here and that low here. And you see now even again what I'm looking for. Cycles within cycles alignment. I cannot talk often enough about that important timing. You really should look out. You see what happened when the short-term cycle, let's start 2016, and the long-term cycle come into alignment. Let's move back for that situation 2016. The key cycle top in the gold to natural gas ratio always implies we would expect rising prices of the underlying commodity, in that case natural gas. You see, this was the key low for natural gas at that point in time, trading at 170. Then let's move forward in time. The next cycles within cycles alignment for the top here of that commodity happened in 2020, where the short-term cycle and the long-term cycle have been in alignment. Now scroll down to what happened to the price of that commodity trading at 156. The key low in the natural gas prices again at that alignment. And hopefully now you get the story. if you see where we are now approaching, we are approaching now the next situation, which only happens every 3 years, when we have the next alignment of that short-term cycle and long-term cycle in the gold to natural gas ratio. So we are really now at that point, and therefore I said that the window now is open for another key low in natural gas prices. And you see that even the short-term swing here in that ratio worked so well in that short-term cycle here also in regards to the absolute price. So we had the down move in the ratio, we had the up move in the underlying asset, and now we had here the bottom, the up move in the ratio, which was expected, down move in the natural gas prices, and now the short-term cycle is topping and the long-term cycle is topping. So it's a picture-perfect situation what, as a cycle analyst, you're watching for. Let me recalculate that indicator here. Yeah, you just need now to add your technical indicators on top of that. So I don't, it's maybe recalculated too many times here on that platform. And once we recalculate that technical indicator, okay, it won't let me do right now. You can even fine tune that. Here we see the cyclic swing in, not the cyclic RSI, and we could do the same if it would allow a retrigger here on that platform. Let's just add this again. That's here again. So we're tuning that to half of the dominant cycle. Now we have it here. So, and we are close to, so this was the February to April 2023, and we are now close to maybe getting the next technical indicator point here, then also showing us here. We are not finally there yet, so there's high volatility in that asset class in natural gas, but hopefully you got the point from that analysis. And if you're interested to do your own research in that data, I have published the cyclic studies in our ideas section. So everyone out there can review that interactive dashboard. You will find the gold natural gas cycle study daily and weekly. Just move to app.cycles.org/ideas. Yeah, at this point, that's the page where you will find these 2 cycle studies. You're invited to review them, do your additional research. So I have brought that data set to you. You don't need to manually create and upload. You can do the cycle research there. And I will post the TradingView technical charts here. I have saved them, and I will share the link to that published chart on TradingView, so then you can also follow up on these charts here with that charting platform, and then continue your technical analysis on the weekly and daily data. And this now really comes into alignment with what I showed you last week on commodity and natural gas, where I analyzed the cycles in the raw price. Yeah, I think I took now half an hour to explain these charts to you. So cycle analysis, technical analysis, and even combining the 2 knowledge domains by referring to an important ratio or commodity ratio, gold to commodity ratio, in that case, gold to natural gas ratio. Last but not least, I need to remind you, we are just doing here education on cycle analysis. This is by no means any investment advice. This is just the beauty of cycle analysis. You are required to do your own analysis and decision making. And last but not least, be careful with the ETFs out there. I have analyzed the futures prices here and the ratio of gold price versus the natural gas spot future price. This is quite different to the ETF. So if you're thinking about to use now UNG or UNL as the ETF for natural gas, this often will not work. I mean, this would now go beyond that session here, why ETF on spot futures do really not work well. So please don't use ETFs if you want to make profit out of that. I know futures trading is also a different subject, so please do your own due diligence on futures trading and why ETFs on these spot futures are really not recommended to play that idea. But I hope now I gave you everything on that to continue on your own. That's the purpose of today. I really wanted to bring that across. Not only it's a beauty of cycle analysis, I think time-wise, this is a very valid analysis to discuss now. The next 8 weeks will show what we have on it, but these kind of timing windows only appear every 2 years, 3 years. And where, if not here at that place, we need to discuss it, right? So, Juice, you mentioned that now, so I can now take some questions if you like. So please don't use the ETFs. I cannot take the time to explain everything why the UNG ETF will not play out. It's related how spot futures convert to ETF prices. That's also a big topic where I would really recommend do some additional research on that. So maybe another question, how to manage that the different phase, out of phase between daily and weekly cycle when plotting together. Yes, on the run 8. The current phase is only detected by using the cycle analyzer I've shown you in front, where it's not only the length, and that's important, and it's also often overlooked, that maybe there are other platforms to tell you something about the cycle length of 220 weeks or 250 days. That's only half of the story. The other part of the story, and has the same importance, is where are we in that cycle swing? And that's the phase. This, in mathematical terms, that's the phase. So, and where we are in that cycle is only given by the cycle analyzer. So if I put this onto this kind of chart here, where I have the daily cycle and the weekly cycle, so I think that's your question, talking about daily and weekly cycle. I need to manually move that cycle because, and that's why charting applications will not help us here. So in that case, TradingView, you can plot cycles, but it won't guide you anyway where to put the phase alignment. So I just manually converted the lows of that cycle, which I received from our cycle analyzer, and started to plot that cycle on the charting application, in that case TradingView. So on the run, there's no automatical way how to get them in sync. This was just a one-time activity between these two platforms. So you need to manage the cycle analyzer on the one hand, which gives you the phase and the cycles, and then maybe more complex charting applications to manually adjust phase based on the knowledge you have from the cycle analyzer. Which account will you be sharing the idea on TradingView? I will do it right now. I will put the link here in the video description. So get Crack for me. I don't have Crack for you, but I have Cycles Crack. So I will save this chart here. I will let me share that for you. So I will enable share. You can't see it. So I will enable sharing. Sharing. I will copy the link. So I've now copied the link. So first I can put it in the chat here. So here you have it. It's right in the chat. And give me just a second to put that link also in the video description. And I will do this now also with the daily chart here. So I also want to share that chart with you. I will now do the same. Sharing. Copy link. I put it in the chat, live chat here, and I will do the same and put it in the video description in a second. So here you have some cycles crack. Because you asked for get crack for me. So give me a second. Yeah, so I've shared the chart with you in the live chat. So take the links from there. I will put them in the video description below. Yeah, Mama Joy, I see your topics have been solved just while we're talking here. Hello, London, Hamburg. Oh, so you're close. Adrian, nice to meet you. So let's see, do we have also some questions, Adrian, here? How important is the in-sample range correlation? You said you were planning to update the algorithm for the correlation score. Could you tell us more on that? Yeah, Adrian, the in-sample range correlation. Let's open also the analyzer on that to talk on that here. So the in-sample correlation is here in the upper left, the area which I'm currently highlighting. So for the colleagues who are just seeing that for the first time, that is the measurement between the theoretical cycle, which is plotted as an overlay, and the behavior of the raw data. For all the in-sample range, for all the dark blue here. And you see, and therefore this number does not change even though if I zoom in or out. And by the way, we have here in that chart, we are analyzing daily data going back for 8 years. So that's a very long-term analysis, and seeing a correlation score above 0.5, just in general, means that we have a very high correlation between the theoretical cycle and the gold to natural gas price cycle. But the question, Adrian, let me recap or re-put your question in here. How important that correlation is, and therefore I always said, be careful with that correlation, even though this green score here is very high. And now if you analyze ratios, so what we're analyzing here is a ratio, it's not a price. This is a ratio. So for ratios, the cyclic correlation between the ratio can more be used instead of analyzing price data, because ratios are more in a harmonic rhythm and not maybe in an underlying price, which has a large underlying trend bias. But in general, and this is what I said, and it's not solved finally, we need to pay more attention to just the time-based correlation and not the price movement correlation. And the correlation score used here is taking into account price and time. That's just the mathematical definition of that correlation score. So the correlation not only on the time axis, also on the price axis. So therefore, stay away if you're analyzing raw price from the correlation score. I need to update the algorithm only taking time into account, but it's not completed yet. So it's still on the table, on the to-do. I really hope to get it out. But as for now, it's just using both. But as said, then maybe the final comment, Adrian, if you analyze other ratios like gold to whatever commodity ratios, this correlation is or can more be used because there's more cyclic behavior if you take the raw price out of your data set. Okay, the upload template into the cycle scanner. yeah, that's maybe for everyone who is using, that's the standard tool set of the foundation I'm using here. So that's not really something special. So every member of the foundation is able to upload your own data. That's nothing specific. So I did this by 2 simple clicks, to be honest. So whatever charting platform you use, you can export your data into a CSV file. And also TradingView is allowing me to, you see it here on the screen, to export chart data. So I have created my data set here. I just click export here. It's then exporting the time format. I press just export here and it downloads as another CSV file. Once done, I just switch to the cycle scanner, the data section, the data sets, the upload new, and here I'm just, you can't see the window now, but you can now just upload the file I've just created from TradingView, upload that data set. I can just redo it here. It will then update that data set just by one button. I've not converted anything, and you see then automatically realized what I have uploaded here. You can give it a name, save it, and then you're done. Afterwards, you see it in the list of your individual data sets. So for example, here, let me check where I have. Here, these 2 data sets, I have the gold, natural gas. This is how I named them. And once uploaded here, I can reopen them again. So that's the procedure. How to upload that data, and that's, you can repeat this with all other data. So I would also recommend now do the same approach for the gold to oil ratio if you want to get some clues on cycles in the oil price and so forth. Yeah, there's an energy model embedded into our cycle analyzer. And we need to spend some more dedicated time to that. What maybe just what is meant by energy. So often we just look at the composite or the cycle to find times on the time series axis when important time in the simple cycle or composite cycle appear. You could also have a different view at a specific cycle, or even if you're dealing with composite cycles. So the energy model is, in other terms, something looking for when cycle phases are in alignment between smaller and longer term cycles. Yeah, so if you build up a composite, you just see the turning points, but sometimes you're not interested in the major turns of the composite. You are interested in the time windows when the phases of different cycles you use are in alignment, so they are showing in the same direction, and then the highest energy, this is what call the energy model. So then you look out for windows in time when the highest energy in the upward or downward direction occur based on the cycles. That's the energy model in simple terms, and we can visualize that also in our cycle scanner and can come based on that. It is there, but you're right, I need to spend a dedicated session on that. So I will outline that in some future sessions. Let me cross-check. Real estate, I see the point that, and Alan, that's a very good point you're ramping up. So we had the very, very well-received interview on the real estate cycle, or the 18.6-year cycle, here in the Cycles YouTube channel. I would recommend everyone to see that. And I agree, we should bring this into our cycle analyzer and find a data set where we can try to analyze it. I mean, 18-year cycle is a very, very long cycle. So we need a data set with long historical data, but let me cross-check, and that's your question. where to find this real estate data set. I totally agree, Alan. As we had this long-term static cycle analysis from the experts on real estate, we need to bring it in the cycle scanner. So yes, I will pay a dedicated session to the 18-point year real estate cycle in one of the next sessions. Thanks for pointing me to that. You have a lot of questions here. So in general, these tools are not connected and we are not related to TradingView. I'm just using their website tools. That's just it. It's just so simple to use, but we don't have any official correlation and these tools are not formally integrated. But we offer one specific way and we explain and support every professional member on that you could integrate your specific TradingView charts into the cycle analysis platform without the need to manually upload and download data like I did. So we have a way to automatically sync your charts with the cycle platform where you can directly jump into the cycle analysis based on your TradingView charts. That's a specific integration we offer. Our service team will help you and enable you on that if you decide to become a professional member, because it requires some back-end configuration on your specific TradingView area. So it's not an server-side integration we offer you, but you can configure your account that this will work, but only one way. So we cannot bring back the cycles into TradingView. PineScript does not allow us to do that this way, but we are starting to improve on that. In general, that idea I just outlined based on TradingView, you can use any charting application if you are able to export data from your charting application. And I'm not an expert of Ameritrade, but I would think that almost any charting tool allows you to save it as a ZSV data file, if it's your data, if you pay for that data. So if you are able to create a ZSV file from, for example, Ameritrade, you can upload it here and our service colleagues will help you on that. Yeah, MetaEye, the ratios. Yeah, that would be, I know what you're talking about. So instead of preparing that data set up front, so to create that calculation of two different data sets, putting in the search bar, like you can do with TradingView. You cannot do it now. So the short answer is these ratio calculation cannot be done with the cycle analyzer by just putting that calculation in the search box. So up to now, you need to do it manually. But it's a good suggestion. If we have both data series available, we can pre-configure it with the divisor there to bring that ratio. I need to note it down. Yeah, MetaEye. So I hear what you're saying. It's not there yet, but maybe not far away to put it in. Okay, I think all the other questions are related to other asset classes. I see you. So we don't have the time today to move into other asset classes. So I see that you're asking for soybean oil, that you're asking for Forex, Japanese yen. So I hear you. I need to, and I will use your comments to decide in the next sections, next sessions, what I want to use, or even the gold oil ratio. So, but let's close it for today. I think you got the purpose of today's session. I think today's session was not only natural gas, in specific. I think it's interesting. I hope I also inspired you on looking on commodity ratios, gold to commodity ratio, cycles in that kind of data set, and ratios in general are a very interesting opportunity to analyze cycles. yeah, and hopefully it inspired you. I think you have a lot to follow up, why the ETFs are not the best trading vehicle, how you bring the futures maybe on your site, how to trade it, analyze now on the technical platform. You have the charts there to follow up with some technical analysis. So thanks for joining me today. Please leave your comments here down below that video. I'm really interested if you find additional research findings based on natural gas. If you do so, also do the community a favor, put your analysis results here down below that video so we can have that as a reference, and latest in 3 years from now we can move back and check if we have been successful ahead of time to spot that. So hope to see you next week again, same place, same time, Monday. Have a nice evening here in Europe, have a nice afternoon in the US, and see you soon. Bye.